Hi everybody and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse. And today, obviously, we're going to talk about Beyond Meat's quarterly reports from yesterday. And also talk about the future revenues they expect for Q4, which will probably be or is the largest indicator why it's dropping as much as it is. Now, I know for a lot of you Beyond holders out there, this is probably a pretty tough day now since yesterday. And again, as I've stated before, when you folks bleed, I bleed too. I'm in the same boat with you. I'm down about, I think, 40-50% in my stocks. So, we're going to carry through this together. But before we get to it, as always, I would appreciate an early thumbs up that helps spread this video to more people out there and get that algorithm working for us. And if you want to be part of this channel, you're interested in Beyond Meat, Tattoo Chef, the very good food company to name a few, make sure to subscribe and don't forget that bell button. And if you want to be part of our awesome PlantStock community Discord channel that is free right now, then take a look in the description down below. Thank you, folks. I truly appreciate your help. So before we get to it, let's just take a quick look at the actual stock chart, ticker symbol BYND. And right now it is trading down 18%. And for some of you like me, first I thought this is a total overreaction to what they got in revenue for Q3 because we've been knowing about this for I think over a month now. But as we're going to talk about, there's a reason for that. So it is around $77 now, 76 as we speak. And if we take a look at the 52-week range here, right? We can see this is the lowest we've seen in over a year. I think we have to go back to the days of the pandemic when I think it was, around the pandemic times. It was down to around $59 at one point, I think. So yes, so what is going on? So this is what we found out from the conference call yesterday. Net revenues were, as they did expect, $106.4 million. And for you who didn't know it, they were supposed to have a between 120 to 140 million. That's what Beyond said themselves, although the street actually expecting them to have about 150 to 160 million, but they stated during summer that it would be 120 to 140 million. And then about a month ago, they came out stating that a lot of things has happened. We'll talk about them more in the video. So they expected around 106, and they were quite right about that. And it's still an increase about 12.7% year over year. Gross profit was $23 million, a margin of 21.6% of net revenues. A large net loss here around $54.8 million or minus 87 cents per common share. And adjusted EBITDA was a loss of $36.8 million or minus 34.5% of net revenues. Now, if we look at the different revenues by channel to compare it with last year, first the last 3 months, we can see in retail in the US, it was about $52 million. The year before that was actually $62 million, so almost $10 million difference there. So then gone down there when it comes to the stores in the US with 15.6%. And the food service, the restaurant business then, $15 million here. And last year it was about 16 million. Not that big of a change, but still they dropped about 7.3%. So in total US net revenues, it was about $67.5 million. And it was actually $78 million last year. So we're talking about a 14% difference here. But then we come to the more interesting news, or the more happier news, is when it comes to internationally, which they are constantly expanding and doing so still right now during the Delta variant. And when we talk about the retails, about $21 million there, and it was closer to 8 million last year. So they're up almost 170%. So great job on that. And when it comes to the food service, about $17.5 million, only 8 last year. So they're up almost 10 million there plus. So 117%, more than double. So in total here then, in international net revenues, almost $40 million there, 38 39.9, so 39 million about, and was only 16 last year. So they're up 22 to 23 million dollars, which is almost 150% change there. So looking really good internationally, right? And I think that's a clear indication that there's a lot more room, right, for them to really expand internationally, because it's still in the US where they get most of their revenues. Here we saw 67 million right now, and internationally 38. So we have ample opportunity to grow a lot on an international scale. And this was a total of 106 million, and last year was 94 million in total. So we still see an increase of 12.7%. But obviously we want to see those numbers being a lot higher. Now we get some reasons obviously why it's been doing worse now in this last quarter. And I do suggest that you go in here and take a look in the investors page yourself to get more information, and also listening to the conference call. That's always important if you're a serious investor, right? So the gross profits or the gross margins are around 21.6%, and it was around 31% just last quarter. And some of the reasons here is related to inventory write-offs and reserves and products repacking costs attributable to Rona, right? It also has to do with increased transportation costs, increased inventory write-offs, again, higher warehouse costs, and increased depreciation and amortization expense, partially offset by reduced co-manufacturer fees. And we know that the loss of operations was bigger this time, around 54 million compared to 18.5 million year ago period. The increase in loss from operations was primarily driven by growth in overall headcount levels, mainly to support the company's operations. Obviously, the company is growing. Innovation and marketing capabilities, increased investment in marketing activities, higher professional service fees related to recently established consulting agreements, and higher restructuring expenses, primarily reflecting increased legal costs, increased production trial activities, and higher outbound freight costs, including in the company's selling expenses. Now, if we take a just quick look at their balance sheet, they're stating here that they have about 886.4 million left of the debt that they took earlier this year. And they've so far in 9 months used about almost $200 million, which is quite much more than the last year, which was $42.7 million. So one of the biggest reasons is that they are expanding like crazy now, right? So when it comes to investments in production equipment and facilities, that's something they're putting a lot more money in. I'm going to talk about that later on also, because that has to do with their new partnerships, right? Which is on a really large scale. But one of the reasons here, again, guys, why they're actually flying down as much as they are right now is related not to the 106 million that they got now, because that was pretty expected, but their net revenues in the range of the net revenues that they are expecting to maybe get in the fourth quarter of this year. And that is even less, maybe around 85 million to 110 million. So that's a huge decrease in what people expected. And the reasons for this is as, quote, embedded in the fourth quarter guidance range above are management expectation of a moderation in sales growth across all channels as a result, among other things, the company's fourth quarter 2021 period containing 5 fewer shipping days compared to the fourth quarter of 2020, impacts associated with knock-on effects from operational challenge in the third quarter of 2021, ongoing operator challenges related to labor issues. And that is something we know is going on all over the US, right, when it comes to getting enough labor right now, as well as general caution among customers based on the pandemic and accelerated orders in the third quarter of 2021 that would otherwise have been expected to materialize in the fourth quarter. And I should maybe point out that in the conference call, Ethan Brown said that they are very cautious right now, but it actually doesn't mean that they couldn't get more than $85 to $110 million. But they don't want to make any mistakes, so they'd rather be cautious in their speculation regarding their future than saying like 120, 130, or $140 million. So just to kind of be a bit strategic there and a bit optimistic. So I think there's room for being optimistic, but still, given what's going on, they want to be careful. And I wanted you guys to just take a look at the research and development. We talked about that on many occasions when it comes to this company, that they normally put about 8 to 10%. But we can see here, guys, that in the last quarter here, about $14 million, almost $15 million is research and development, right? And that's comparable with last year, which was only 8 million, right? Same here if we take a look at the 9 months ended, $44 million so far and $20 million. So they're closer to like 12 to 15% right now when it comes to R&D. So that just tells us something, that they're really committed to making the perfect product, making it edible for anyone who normally loves meat but wants the perfect replica, right? And when it comes to loss from operations here, is $54 million compared to last year, which is $80 million. And according to the CEO, right, Ethan Brown, and he stated it basically several times, it is because what they're doing now, they are actually expanding much faster now. They have these huge partnerships, as we know, with McDonald's, PepsiCo, Yum Brands, and so forth, and a lot more stores, right? So they need to keep prepping for those businesses because they've barely begun so far. Now, in my free Discord channel, Arthur has actually put together the presentation and conference call where he wrote down most of the important things here. I won't be able to look at everything here, but again, guys, you'll get a lot more details here. If you want one of these, feel free to join our free Discord channel, guys, down in the description. And he's been very thorough here. And here, since we are talking about the investment and the different costs, here it says what basically Ethan Brown said several times on the earnings call, is that the investment here is spending based on anticipated future expansion via partnerships and food service launches, right? So again, they are preparing, for really rolling out in 2022. As it states here too, EU and China rollouts accelerate then in 2022. Spending will not keep increasing once expansion is complete. And as Arthur here says, to me suggests capital raise will not be needed for the year 2022, which is awesome, right? So this is what we want to see, right? That spending will not increase once expansion is complete. And that's the typical thing we see in these great disruptive companies that are super growth companies, right? That once their revenue starts rolling in more and more, they won't have to spend as much, nor it could be the same amount to some extent because they're getting more money, but percentage-wise, it could be less, right? And as they also stated, I think this is important, the 5-year program with Stanford to study health and benefits, publications forthcoming. This is good. That's also something that Ethan Brown talked about, that next year, he's actually writing about this here too. They are planning to market the company way more than they have done so far, both when it comes to the health benefits, but also when it comes to sustainability, to really get the message out there simultaneously when there are actually now moving on with the McDonald's deals and hopefully actually being at thousands of more locations, right? So people will be more aware of them where they're at. Also, something interesting here, additions to management team will be revealed in 2022, which will help us understand the food service strategy better, which is great, right? Because that's one of their key focuses now, to get into those QSRs, right? And then some information about products that they're talking about, the Beyond Burger 4.0 in 2022, meaning then an even closer replica to the real thing when it comes to taste and texture. And some products launched in 2022 will hint at price parity. So that's what we're looking forward to, right? And he stated again, price parity is still in the books when it comes for 2024, which should be the game changer here. Some new packaging in 2022. And also great that Arthur wrote this down, that Ethan did store in EU Tour when he went around, and he actually took a lot of different vegan options, vegan burgers and patties in different countries in Europe. Because as we know, when it comes to veganism and plant-based alternatives, we have a lot of them here in Europe. And they actually took that to their facilities, they cooked them up, they tried them out, and they found that several of them are really good, but they did find that they're not better. And they feel that that's a great hope for the continued growth in Europe, that they have the better product. Obviously, a bit biased maybe, but that's so far what we've heard, right? Because still right now, even now, they are still the number one brand in the US. And as I stated here, they did not launch a major marketing campaign now in 2021 because waiting for QCRs to ramp up, right? That these different partnerships before. And considering everything that's been going on during 2021 with the Delta variant and Rona, maybe it wasn't the best time anyhow, right? So, and again, this is going to be, next year is going to be the biggest marketing campaign ever. And they also pointed out that BYND 3.0 won many different awards, again, being the most favorite burger, plant-based burger of every plant-based company out there. And again, when it comes to next quarter, conservative guidance in order to avoid a Q3 revenue adjustment situation, pandemic, logistic, labor issues. Immediate predictor of the future is what just happened. That's why guidance is low. Working through the last remaining issues, lingering from Q3, getting back on track quickly, return to normal sometime this quarter. And also something interesting here that Arthur got in here is mentioned that is 3.6 million international order from a single undisclosed customer. So it'll be interesting to see if we can get more information about that. So that's basically it, guys. So if we just wrap this up, depending on if you're long-term or not, guys, we're bleeding here right now. But does this give us an opportunity that we have a much better price than we have had so far? I mean, now around $79. We look at the statistic, the PS ratio here, around $13. Around 13 to 14 price to sales, looking way more attractive than it has done so far. Again, 52-week range. Now it's been down to $76. And about in January was up to $221. So obviously this is a much better buying opportunity if you're committed long term. So again, let's be real. If this is a company that you are interested, if you're already invested in it and you want to invest more, or that you are thinking about investing in it, remember, this is a long-term play. You need to be committed here, right? You need to really try to understand this sector and this company, and you have to assume that in 5 to 10 years, this overall sector is going to grow a lot, which I totally believe in the way I've seen this company and this sector and the research I've done, right? But there's still assumptions, right? You need to believe that in the next 5-10 years, this is going to be a really, really big market, a really big sector, and that this company is going to remain the industry leader. Now, if you don't feel that way or you don't see it that way, well, then I would understand if you're not ready to invest in this company right now. But for me, I'm in this in the long haul, right? So I'm still convinced that this is the best plant-based company out there. This is the industry leader, and they're going to move heads in the next couple of years. Now, like I said, I'm obviously bleeding like a lot of you out there. I think I'm down like 40 to 50%. The last time I want to invest more now, to be honest. If I can get my girlfriend to be okay with it, I might actually mortgage my house once again, just to buy more right now. But she's probably not going to be okay with that. So I think about 3-4 weeks ago, I invested another $6,000 to $7,000 when it was around 107. So even that part, I'm really down, right? So again, I'm bleeding like you are, and I wouldn't sell to begin with, but it wouldn't make sense for me at all when I'm down this much anyhow to sell now, because remember, you don't actually lose money until you sell when you're minus, right? So unless the company actually goes bankrupt, and you got to ask yourself, do you see this company going bankrupt anytime soon, given the times we live in? And as some of us expect, if they actually do expand like crazy next year in 2022, that is, And with McDonald's maybe going to these 13,000 new locations only in the US and maybe more internationally, and then we have the PepsiCo deal opening up more and more, getting more information about that. Well, that could mean that the stock price could move up really quickly again, right? So me personally, I would not want to miss out on that opportunity, but that's just me, obviously. All right, folks, I really hope you got a lot of value from today's video. And if you did, make sure to smash the like button and help me out. And if you want to continue getting more information regarding Beyond Meat, Tattoo Chef, the Very Good Food Company, and maybe Oatly, then make sure to subscribe and don't forget that bell button. And I want to say thank you to Arthur in our Discord channel. Again, you've done magnificent jobs on so many different levels already. I really appreciate you, man. And if you want to be part of this group, the Discord channel, the free Discord channel, and you want to maybe start talking with Arthur, who has a lot of great things to say and a lot of other great people in there, then join us. All right. Hope to see you soon, guys. But don't forget, as always, this was not financial advice. These are just my own thoughts and ideas. It's important that you do your own due diligence, especially now, right? Given the volatile market when it comes to any company out there, then always remember also to invest safe. All right, guys, I hope you have a great Thursday. Hope to see you soon, and peace out.